Hello, traders. It's 8:03 a.m. Chicago time on Monday, the 17th of December, 2018. This is the last full week of trading for the year. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Looking at the quote page this morning and seeing that Europe's is off, is selling off a little bit, down 1%. The Euro stocks, the DAX is down 1%. The Euro stocks down 0.78%. The Dow futures starting out 153 points down. Nasdaq 37 points down, and the S&P 14 points down. Allocation is to safety this morning. The euro is the crude oil is leading the pack, but just remember, real quick, that crude has rolled to February 2019. We're trading a CLG9 or CLG19 contract, depending on your feed. And that contract's trading at 51.66, up 18 cents, or 0.33%. So again, crude rolled to February 2019 going forward. Gold is up, euro's up, British pound is up, Japanese yen is up, and the bonds and the 10 years are up as well. So that's all you need to know to recognize that allocation this morning is more to the safety side. That's the sentiment this morning. In terms of what's ahead, if this calendar would just stay open. In terms of what's ahead, it looks pretty clean. Going forward, we have NAHB Housing Market Index out of the U.S. We did get some numbers this morning, earlier, Empire Manufacturing, and some Canadian numbers, but nothing too significant. At 10 a.m. Eastern, we're getting NAHB Housing Market Index, expecting 61, and that's it. But this week is chock full of releases. We're going to get German IFO tomorrow, U.S. housing starts, building permits. The Wednesday, we're getting German PPI, UK CPI, but we're also getting the FOMC rate decision, and we're going to be paying attention to Fed's Powell's comments on how things are looking in terms of the FOMC sentiment towards the economy. Thursday, there's, let's see, it's a busy one. So focus remains on economic and political issues. Year-end lull yet to materialize with key rate decision in the week. FOMC of 2018 ending on Wednesday. The Bank of Japan and Bank of England on Thursday. Also EU Commission to discuss Italy's budget on Wednesday. China starting their annual three-day economic policy setting meeting also on Wednesday to set out priorities for economic policy for the coming year. So just quite a bit of macro-based stuff coming up this week. So just it's likely to be a bit of a mover. And then also don't forget that it's Quad Witching Friday. This Friday, we are still rolling this week. The roll is still proceeding, and we're likely to get some noisy action. This is just a perfect week. Those of you who are at Convergent, we did an impromptu on Friday after the close. I urge you to listen to that. Just take it easy this week. Pick your spots. This is the kind of week where you need to just exercise some extra attention to being disciplined and only executing when you see things really line up according to your plan. Let's take a look at what we expected on Friday versus what we got. Friday, the expectation is for the market to be responsive. So the primary expectations for the market to be responsive in all cases, right? So except for scenario 3, which was initiative early and responsive later, which didn't play out. Scenario 2, looking for it to be responsive right away. Look towards the low of of Thursday, 41 and a quarter, expecting it not to fill. So you see there the top of scenario two, and then impulse down, consolidate, and then start pushing towards this high volume node down here. And that's pretty much exactly what happened. Again, this is not a predictive exercise. This is simply an exercise in determining what could happen so we can align ourselves and have an open mind so that we're not locked into what must, should, has to, needs to, that sort of stuff. We're always open. The scenarios need to contradict each other. In most cases, we need to cover a scenario for as many eventualities or possibilities as possible as we look down onto the battlefield before the market and create a plan. So again, scenario two is the one that played out almost completely perfectly. Responsive buying to leave a small gap towards Thursday's low of 41 and a quarter, impulse down, consolidate, and push lower into this high volume node. This is what actually happened. Let's look at it on the 15. So if we look at this, this is what you've got. Let's get rid of these. This is what you've got. Responsive buying. We stopped just short. We put in a high of 39.75, left a tiny little gap, a 6-tick gap in there, and then we started to push lower. There's the impulse consolidation mid-range, and then walk down into this high volume node. Almost perfect, very, very whipsawy, in my opinion. Again, I don't try to make excuses for the market and trading, but in my opinion, it's quite difficult to read. It's quite back and forth. It's just not that simple to read. So this is a good, and it's that time of year. I mean, it's we're going into the holiday and we have this role to deal with. Here's the big picture. The big picture is that we have been consolidating in this range for quite some time. We extended it in the March contract down to 25.87 from 26.07. Remember, in the December, this was 26.04. There's a $4 premium on the March contract, and then so we moved down into 25.87, which was 25.83 in the December, and we are walking towards it. So this is another impulse pullback continuation type move, and we've been trying to push this low all morning. The overnight low is 25.91, so right up against this low from the 7th. So that's where we stand. 2 Fridays ago, we're down here, and we are back near the lower end of the range. So everybody's screaming bloody murder, and the streets are flowing red. So be careful. Having a very strong sell bias coming into this. The overnight session, quite responsive on the open last night. Opened below, responded pretty well, pushed right back into the point of control right here, and then started to drift up. It looked like it was making a good run to 26.23, which you can see here from Friday. Almost a perfect support turned resistance type of scenario up there. Looked like it was making a run for that, and it stalled out at 1675, consolidated for a while, and then when Europe came in, Europe started to sell, and we moved back down. Look at this profile. This is just one brutal profile. We have just price discovery throughout. Big fight at the top. And there's quite a bit of volume that went off just recently here with the point of control remaining in the middle. Just really ugly. Just cannot read too much into that, other than the fact that there are fights going on all across the board. It seems like every strike, which is every 5 points, is getting fought. So not much to glean from the overnight profile, except that 159,000 contracts traded. Wow, that is really low. Not only for this selling, but for the fact that we are rolling. It's really quiet. Um, Given the range, given the type of trading, the type of profile that we have, just hard to figure out what it's trying to do here. The overnight inventory is short. It spent most of its time above, but currently the inventory is short. The delta is negative. Sellers have taken over, and it looks to be heading even lower. It's the price discovery process is working to the short side, and it doesn't seem to have abated. So we are opening near the low end of the range, near the low end of the range here. So we are done with the review segment, and we're moving on to our plans. So our scenarios are tricky this morning. This morning, it is very likely, given how we operate, how we traded overnight, it is very likely to see a continuation lower and to take out this low that we put in last week at 87. However, I'm looking for some responsive buying. We're opening right up against the prior low, and I'm looking for an open auction out of range that gets responsive into 2609, 2610. I'm looking for it to push as far as this area right here. See that support, bounce up towards the IB, drop, retest that support, bounce up a little bit, fall through, retest from below. I'm looking for that push, for the push towards 2609, 2610, and I'm looking for an impulse down that pushes us through the OS, and for us to start on our journey to continue lower towards this 2566 area. It is just quite it is likely to be a grind. So just be careful jumping on and trying to trade this as a breakout. Even if it's to the short side, I expect it to be grindy, much like we saw on Friday. Friday the buyers just had nothing going on. I mean, it's just they came in early. They had a couple of good bounces, but really we're just since the day we broke the one-time framing up, which was Thursday, we have not really had a good run higher. So I'm expecting that we still have not found those buyers just yet, uh, and so just for me, I favor the short side, but the bounces are pretty whipsawy. We could have we have bounces that retrace 80%, 90%, and then fall back through the low. It really isn't all that easy to trade. The alternative is we push lower right away, we advertise for sellers, and then once we take out this 2587 area, we get the bounce back up into the opening swing, and then we start drifting back towards the into the prior day's range. And if it continues higher, then we're looking for 2623, 2623 right up here to finish in balance with the lower high, lower low, right? And that would be scenario number 2. Those are the two key scenarios. Scenario 3, open test up, drive down, in which case we would get farther down. We would push farther down through 2566. This is likely not to hold, and it's likely to push into 2560 and below. That's scenario 3, open, push higher, test down, and then the scenario 4 is open, test down, and then drive up. And in that case, again, 23 or higher in that situation. Again, this week is expiration week. This Friday's quad witching Friday. We have FOMC, we have BOE, we have the EU doing its thing, the BOJ doing its thing. A lot of it going on Wednesday, so I'm expecting tomorrow to just be dead quiet. Also, I want you to know that I'm gone on Friday. I'm going to travel on Friday instead of Saturday for the Christmas holiday. I'll be gone through Christmas. I'm returning Christmas Day, and I'll be back in my seat next Wednesday. So Friday, no trader bite through Wednesday, through the Tuesday of Christmas, and then I'll be back on the 26th so we can do some holiday trading. Good luck today, and I'll catch you tomorrow. Take care.